I'll put on glasses right now because it's like
it.
this Katie look. I love it.
I scratched my cornea. I tend to do that about every 4 months, so I'm in glasses. We'll see how it goes.
Still loving it. You know, we could do more China, guys. We could do certainly the auctions, the treasury auctions. We could do a lot of stuff, all the data coming. But we've got a bit of a theme having to do with travel, and we're going to talk about airlines. Jess and I, a story on our radar has to do with American Airlines paying the largest ever tarmac delay fine, $4.1 million. They violated rules on 43 flights with 58 passengers. Listen, this is something that our transportation secretary has definitely put front and center. But for all of us who've been on a tarmac, I think it's okay.
I think it is too. I've definitely been on one of those flights like that, but unfortunately, I mean, it's one of those things where it's pretty painful when you're sitting there, but actually half of the penalty, so about $2 million of it would be used to compensate passengers who were on those delayed flights.
Yes.
So that's something I think is notable and worthy to point out there. But on one of those 43 flights, passengers were not provided food and water, and this was something actually at DFW, so in Texas, right? I'm from there.
Wait, I thought we don't get food and water anyway unless we pay for it. Isn't that how it works?
Apparently, it's a requirement in the
Okay.
law. So.
Depends on where you're flying.
Yeah,
Don't you get some peanuts as well, or I don't know?
Yeah.
Well, there are better snacks on certain flights than peanuts, I think. If you're traveling internationally, the problem is that the tarmac is definitely not the only problem that you're hitting when you look at traveling either domestically or internationally.
Yeah, definitely. And it feels like one of the defining stories of this year has been unrest with the airlines. It's going to be interesting to see if anything changes as a result of that. But I wanted to stick with travel because there was a really interesting story on the terminal today about Google. Apparently, to the search engine, this is the best time to book your holiday flights. They released their updated booking trends analysis on August 28th, and along with a new cheapest time to book feature, it turns out domestic flights timed around Christmas this year will have the lowest fares 71 days before departure. So traveling on December 21st, for example, that means you should buy your flight as early as October 7th. I'm
sorry, Katie, I gotta go book my flight. No, it's funny. We talked to the lead economist over at Hopper. They are a booking app, and she said the same thing, that if you're looking to travel in the holidays, the best time, the sweet spot is mid-September to mid-October to book your flights to get the best fare. So yeah, time to do it now, guys.
Yeah, I feel like next couple of weeks then we need to get on this.
That requires planning ahead though, and that's really difficult, so I don't know.
Except, you know what she also said? If for hotels, better to wait if you're a procrastinator last minute, because the hotels are just trying to like fill up their rooms, so you could procrastinate on the hotel, Katie.
Did not get that part of the memo. I have been looking at flights all the way through March, and I've got to tell you, if you're traveling internationally, the costs are still quite high, whether you wait or not. But if you are going to try to get any sort of discount, I worry. Right now, it says that mid-September to early October is when you should book. But everyone's going to come back from Labor Day and realize they want another break, aren't they?
Yeah, exactly. I just came off from 2 days off, and I'm thinking about my next vacation. But it's interesting, if you take a look at last year's advice, actually domestic December holiday flight pricing trends for the U.S. indicated that you could land the best fare up to 22 days before departure. So it feels like, as a whole, we've all started planning ahead more.
Yep, I'm a procrastinator, always last minute, so I'm paying up, always, always, always. All right, guys, we will be back, though, in less than an hour's time. We're going to wrap up the trading day on radio, on TV, on YouTube, and, of course, on Bloomberg Originals, our streaming service. Countdown to the close, just about 53 minutes away. So join us at 4 p.m., though, for Beyond the Bell. All right, everybody, the rodeo has closed its doors. The cowboy boots and hats are put back in the closet. Jackson Hole wrapping up. The countdown clock has begun on the next FOMC meeting of the U.S. Central Bank. Jess, that is on September 20th, of course.
Right. We still have a ton of data coming between now and then. Obviously, the PCE, the Fed's preferred gauge for inflation, coming later this week on Thursday. We have a CPI report on the 13th. So still, and I can't leave out the jobs report coming on Friday.
It means a lot for all of us to chew on, including Fed officials, too. So we've all had our weekend coffee. We've thought more about Jackson Hole, the meeting of central bankers that was. And on that, Bloomberg News rates reporter Michael McKenzie writes, Fed Chair Jay Powell has the bond market exactly where he wants it, lacking conviction as to the Fed's next steps, kind of keeping us in limbo. He and Bloomberg's Liz Kaplan-McCormick wrote it. Mike joins us now in our Bloomberg Interactive Broker studio. Mike, great to have you here with us. So talk to us about Jay Powell wanting us kind of full of doubt, kind of not quite sure what's going to happen next.
Well, I think he neatly summed it all up by saying that they're navigating by the stars, but the sky is cloudy. So it's sort of what the bond market's doing right now. The bond market's trying to work out where are interest rates going to peak. More importantly, where does the neutral rate, I guess the long-run rate, going to end up? And we'll find out at the next Fed meeting, because that's when the Fed will release its new updated quarterly summary of economic projections. And it'll actually tell us whether they think that neutral rate of 2.5% is actually higher. A lot of people in the market are beginning to think it is higher because the economy's been so resilient. And inflation, while it's trending down, is not trending down smoothly enough to sort of say the job is done.
But he has us, as you say in the story, kind of right where he wants us, right? We're kind of on pins and needles a little bit, like, all right, he's warned us that more higher rates could come. So, you know, I feel like we've all got the smackdown, the memo of, you think we're going to cut rates today or this year? And not going to happen, folks.
Yes, he has, and I think that's where I mean, this is going to be August will be the fourth month in a row where the Treasury market, the Treasury Bloomberg index, has been negative, and we've pretty much erased all of this year's gains, and that's a big deal because when people came into the market this year, a lot of fund managers that Liz and I spoke with said, "Oh, this is the year of the bond. We've had 2 bad years." No one in the Treasury market was thinking back in January, we're going to get 3 bad years. So it matters. The stakes are pretty high here because a lot of investors have been stepping out and buying 5 years and 10 years as those yields have been rising in the last 4 months, and they're underwater.
Mm-hmm. We laid out some of the major data points that are coming this week. What's top of mind in your view?
It will be jobs. I mean, the monthly jobs report always sets the tone for the months to come. It always arrives on that first Friday of the month, and this month is going to be the 1st of September. And I think the wages are still expected to be growing above 4% on an annual basis. And if you talk to people in the market, particularly people such as Dan Iverson at PIMCO, he, a couple of weeks back, flagged to me, you can't count the Fed out. If wages continue to grow at a pretty healthy clip, the Fed can come back in November, possibly December, and raise again. And you can see in the pricing in the market, we've got roughly 18 basis points priced in for another rate hike this year. So that's around roughly 70% chance by November the funds rate gets nudged up again. And if the Fed indeed says, you know, when they release their dot plot this month, in September, if they say, actually, we thought we were going to cut by 100 basis points when we last did the summary of economic projections. If they trim that back, this market will continue to remain under pressure. Even though today we had...
Bond market?
Yeah, the bond market.
Okay.
And today we saw 2-year and 5-year auctions, highest level since before the financial crisis, these yield levels. And the bidding was okay, but it wasn't spectacular. The bidding didn't tell you that investors saying, yes, this is the top. It was just kind of in line with what we've seen recently. It's an interesting tell when the market just isn't really, yeah, we'll take down this supply. These are the highest yields for a 2 years since 2006, the highest yields for 5 years since 2007, but it wasn't over the top demand.
Does that say that investors say, wait, there's even higher yields coming?
Yeah, and it gets back to what we wrote in this story.
So why buy now?
Yeah, well, yeah, you can buy now, but probably be willing to maybe buy at higher yields in the next few months. Because don't forget also the Treasury is issuing more and more treasuries to fund the deficit.
Right.
And the Fed itself is letting its balance sheet shrink. So you've got this real tension in the market as well, not just from Fed policy, but from QT and the rising tide of Treasury sales.
When you look a year ago where the S&P 500 was trading, where the 10-year actually peaked compared to now, that's about a 900-point difference. Why do you think we see a divergence there with what the equity market is telling us versus what the bond market is telling us?
Well, I sort of cast my mind back to May of 2007 when the 10-year got to 525, which was then in line with the current funds rate at the time. Equity still partied on, and they didn't peak that year. The S&P hit a record high at the end of October in 2007. Equities always look at the glass half full. Bond market, on the other hand, looks at the glass kind of half empty. But I do think this year you have to give the equity market some credence here. The earnings haven't fallen away that people expected. Margins, companies have been able to pass on higher costs, and they're maintaining their margins. And I think you've got to think maybe, okay, is it next quarter, the following quarter? Is it more like mid-2024 when corporate margins come under real pressure? We don't know. And at the same time, if you look at the Atlanta Fed Now model, the economy's growing. And nominal
But that could be a
earnings,
tricky number.
That's a tricky number,
yeah,
true.
to be
but
fair.
the bottom line for equities is the equity market doesn't look at things in real terms. They look at nominal growth. And nominal growth pushes up nominal earnings and revenues. And that's kind of where we're going. And then you overlay the whole AI, which perhaps is overdone. But at the same time, it is remarkable how this equity market is holding in.
Some of it, though, I don't know how you think about it, Michael, and I think we've talked about this, right, Jess, in that, okay, so if the labor market holds up and if we continue to see people paid more, that means consumers go out and spending, and that generally is a good thing, I feel like, for many companies that are out there, and that is supportive of the equity markets. So in some regards, lucky the Fed, because we haven't seen yet a recession and people are still working and it's a very tight labor market. So yeah, we can continue to raise rates if we need to. Yes. But it's the quandary, because if they overdo it, we know there's a lag effect, and then you wonder, if they overdo it, do we ultimately see a really rough recession maybe next year? That's the kind of danger. And I was talking to an asset manager this morning and she sort of said to me, look, the market's pricing in a soft landing, but we all know soft landings eventually just delay the inevitable, which is a harder landing. Feels like it's marketing, right? Yeah. Here's your soft landing. Yeah. But it's really going to be a hard landing. I think what's going to be interesting, though, what is probably potentially different about this cycle is that a lot of companies refinanced, as did homeowners, at ultra low rates. There's no pressing need for a big chunk of the economy to go out and get hit by these higher rates. They don't need to refinance. So there's going to be a delay. And it's particularly important when you look at the credit market. Another reason why you could argue that the equity market's holding in here is because the credit market is not screaming red flag. Mm-hmm. The credit market's holding in really well, and partly because a lot of companies have locked in lower for longer. And so that's going to take a time before that begins to come to fruition. So 2 to 3 years? How do you guys think about that? Like, I mean, typically the corporates borrow is what? Well, I'd say investment-grade companies definitely termed out more towards the 10-year mark. Okay, so it's going to be more of a problem, though, for the lower-rated companies, junk bonds in particular, because they tend to borrow at a lower term over time. Mm-hmm. So next year, I think, will begin. I mean, again, you can sort of paint a picture for by middle of next year, we should see the economy having slowed down, but in part because more and more lower-quality companies are having to come to the market, and they're going to be facing this debt cliff, and also margins by then. We'll know whether or not margins can really hold in. And I guess that's the point where perhaps the Fed does start to ease a little bit.
So maybe even echoing a little bit of what Jim Bullard, obviously former Fed official, said last week, but nonetheless influential voice, talking about how people are underestimating the strength of the economy.
I think that's been the story for the year. I don't think anyone really thought the US economy was going to be this resilient, particularly after what happened in March with the regional banks. It's like when you play musical chairs, and it's like the recession came, and when the music stops, you pull out the recession chairs. Like, it's not happening. Eventually the call is right, like a stop clock. It's right twice a day, and at some point the economy will slow down, and some event we don't know. That's the sort of unknown. What's going to come along here and derail the U.S. economy?
So say, for instance, toward the late end of 2005, when the yield curve, the 2s10 started inverting, but then obviously you didn't see that happen for a couple more years toward the end of 2007, early 2008. Yep. So it could be signaling that, but it could take some time, right?
And again, getting back to what I said earlier, there is just no sign of balance sheet excess here, either for the household sector or for corporate sector. And that was what we were seeing in 2006. More and more people treating their homes like an ATM, more and more companies getting riskier and riskier. And the banks, of course, were doing all this kind of funky stuff, which they said at the time wasn't going to hit our balance sheet, but in the end, it did. It does make us scratch our heads a million times a day. Michael McKenzie, what a pleasure. Rates reporter who covers the bond market and so much more here at Bloomberg News, joining us in our interactive broker studio. I'm Carol Masser, along with Jess Metton, in for Tim Stanovic. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, NASDAQ, all in the green. Volume, though, 25% below the average over the past 3 months. The S&P right now up 16 points, a gain of 0.4%. Dow Industrials up 140 points now, up 0.4%. NASDAQ up 71. That is a gain of 0.5%. The Russell 2000 index of small cap shares, it's advancing by 0.7%. 10-year yield now at 4.20%. We do have the 2-year right now yielding 5.04%. Spot gold up 0.3%, $19.20 the ounce, while West Texas Intermediate crude up 0.4%, $80.18 a barrel. Stocks rose, bond yields fell at the start of a week full of economic data that will help shape the outlook for Federal Reserve policy. We've got the jobs report on Friday. At Northern Trust, Chief Investment Officer Katie Nixon sees 2 headwinds for stocks.
Higher longer-term rates are going to be a headwind to valuations, and valuations are already very high, stretched relative to historical norms and averages. The second thing is inflation, which is going to be persistently higher, which is why the Fed's going to remain higher.
You can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. American Airlines has been ordered to pay a $4.1 million fine, the largest such penalty to date, for allowing aircraft to sit on the ground for 3 hours or more without giving passengers a chance to exit. American Airlines up by 0.5%, rival UAL up 0.3%, Delta up 1%. On the minus side right now, Southwest down 0.9%, JetBlue down by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, so appreciate it. Charlie Pellet there with a Bloomberg Business News Flash. All right, everybody, China, you know, has long been at the heart of Apple's supply chain. About 80% of the company's manufacturing partners holding a footprint in that country. Now, as U.S. and China relations sour, which is something we're going to talk about a little bit later on, new production sites are changing the way Apple's devices are made. And this is according to today's Bloomberg Big Take. This is a story deemed a priority by the Bloomberg editorial team. It's a must-read, basically, Jess.
Meantime, speaking of Apple devices, the company is working on a revamped iPad Pro for next year. This would be its first major overhaul in a half-decade, Carol. It can't come soon enough after sales slipped to its lowest level since the cusp of the pandemic this past quarter.
All right, there's a lot going on, so let's get to it. Today's Apple Roundup. Back with us is our own Mark Gurman. He's Chief Technology Correspondent here at Bloomberg News. As you know, he's a go-to for all of us on everything to do with Apple. He joins us once again on Zoom from Los Angeles. Mark, great to have you back with us. We do want to start big picture, if we may, about Apple's massive supply chain. So much of it still in China. That seems to be changing, but very slowly. Give us a little perspective here.
Yeah, Carol, thank you so much. I'm very happy to be back. So the Apple supply chain, the modern supply chain, I should say, set up about 2 decades ago by Tim Cook. The idea was to build all the products through a company called Foxconn in China, have them manufactured there at scale, at speed, with precision, and then shipped globally, right? But over the last decade or so, we've seen some changes there. They've added additional manufacturing partners, companies like Quanta Computing, companies like Jabil, companies like Pegatron and Tata. And now you're seeing them retain their Chinese base of manufacturing. All those companies still build products for Apple in mainland China. But in terms of growth, in terms of expansion of supply chain, that's happening external to China. So you're seeing new sites in places like Thailand, India, Vietnam, and Malaysia, right? Those 4 countries, but with the majority share of that expansion happening particularly in India, and then Vietnam is a close second, Malaysia third, and Thailand fourth.
So when you're looking at that expansion in those particular areas that you were just talking about, how does that translate financially for Apple?
Well, India is a big example of how it translates financially. India and their Prime Minister, Modi there, they've implemented tariff-related rules and fines that if you produce products externally to India and then import them into the country, there's really high import taxes. So what Apple had to do from a financial perspective is build new sites in India to produce versions of the iPhone for sale to save on those taxes.
Do other countries want Apple? I feel like it's a stupid question, Mark, but I mean, I would assume everybody's vying to be like, here, come produce, manufacture, here. Is that the case?
I mean, every country you can name up to the United States is throwing as many incentives at Apple and these other technology companies, chip companies, in order to get them to produce products in their respective countries and cities. Obviously, anytime Apple comes into your city, it's an economic, boom for the area. You're talking about much more employment, much more spending. So it is a positive, and that's why those incentives exist. Now, speaking of the U.S., I will add, Apple doesn't do anything other than token manufacturing at a city in a small part in Austin, Texas for one Mac. So I really count that as basically no production in the U.S., and I'm not being facetious. But what they will be doing is they will be working with TSMC to produce a very small number of chips at a plant in Arizona, starting sometime at the tail end of next year.
Mark, what I want to know, though, is like I've bought an Apple product, my husband and I think over the years, and we have been fascinating just kind of tracking it through the supply chain and knowing when it's on our shores, on the West Coast. I mean, it's just such an incredibly efficient supply chain. And I do wonder, will that efficiency potentially change over time? And then will it also maybe cost me more for an Apple device?
I think the answer is no on both. They've been shipping products from Vietnam and Malaysia and Thailand for a couple of years now. And there really hasn't been any hiccups that I think the consumer has noticed, either on a pricing perspective, but also on shipment times. If you think about the releases where the timing really matters for when you receive the product, it's really when a new product goes on sale, particularly the iPhone. And the first round of iPhones are still shipped from China. So you're not going to see any hiccups there in all likelihood. There have been some changes on pricing. There are going to be a few tweaks to pricing in some countries on the new iPhones being announced on September 12th. They should also go on sale September 22nd, by the way. But I don't think those are production related. I think those are parts related, and obviously inflation and the current state of the economy globally. So I wouldn't put two and two together personally.
Do you think this would have happened without the U.S.-China tensions that are currently going on?
I think that what really got the ball rolling on opening new sites outside of China was the Donald Trump tariffs that were a key issue in 2017 to 2019, right? Those really scared Apple and made them start investigating how they can push some of that supply chain outside of China. Quite frankly, it shouldn't have taken Trump to get Apple to think outside of China, but that's what really did it. And I think that acceleration has been caused by those tensions. I think something that people don't talk about enough, to be honest with you, is TSMC and the impact of production there. So TSMC, they manufacture all of Apple's modern chips that go into all their products. They're based in Taiwan, so you're seeing a lot of production happening there. I'm no geopolitical expert, but I think Taiwan is probably a major risk point for Apple. And if the Taiwan factory goes down, I mean, I'm told it can take even up to north of a year for Apple and TSMC to build up a site at that same capacity elsewhere.
I love that you went there, because did you see the story on the Bloomberg about the Foxconn Technology Group founder? I guess he's running for
Terry Go,
and basically said, that he's safe because of how much that they play into Apple's supply chain, and basically also how much, I guess, Chinese either pension funds or so on and so forth invest in it, that Beijing isn't going to want to play around with them. And I wonder if that's the same story for TSMC.
Well, I think that's the same logic that applies to Apple. I think that's the same logic that applies to TSMC, but it's only logical until it's not. Until something changes in the world and the global economy and these geopolitical tensions, then it's fine. But when something changes, then it's a nightmare and it's the end of the world for them. And the question is there that plan B in place in order to mitigate that damage? And I think what Apple's trying to do to mitigate that is opening up these production lines outside of China. And I think if you look 10 years down the road, it's very possible that the majority of the Apple supply chain will be outside of China, but it's going to take a long time.
Yeah.
It's been moving very slow. It's been more of an augmentation outside of China rather than a replacement at this point.
Great perspective.
I want to switch gears real quickly and ask you about the iPad Pro. What do we know so far about what could be coming for next year?
So it'll be a redesigned iPad Pro. next year with an M3 chip, speaking of TSMC, that's going to be their next generation 3nm processor designed by Apple. You're going to see OLED displays. So now the iPad will be using the same screen technology as the iPhone. Remember when Apple shifted to OLED in 2017 with the iPhone 10? You're going to get that same new screen technology. It looks so much better. These days, everyone's used to OLED on their phone, so they don't really know the difference. But next time you see an iPad from today, hold up an OLED iPhone next to an LCD iPad, and you'll see the difference. You're also going to see that new design I mentioned, improved cameras, slightly larger display on the top-end model. So I think it's going to overall be a very compelling new product. First redesign to the iPad Pro since the tail end of 2018 as well.
Magic keyboard, 20 seconds?
Magic keyboard, that's right. I forgot about that. New function row at the top, larger trackpad, make it a little bit more laptop-like.
Call it magic.
Probably costs, probably between $350 and $400.
Okay. It's an important device to Apple, quickly?
It used to be more important. Now it's sort of lagging, and it's really important for Apple to make it important again. And I think they'll get it done.
I tell you, we use our iPads still a lot, along with everything else Apple in our world. Mark Gurman, thank you. That big perspective, I think, so important to understanding this company and just the world, and great to get an update on what's going on in terms of the iPad Pro. Mark Gurman, a go-to on all things Apple. We say it a million times because it's so true. He's Chief Technology Correspondent at Bloomberg News, joining us on Zoom from our LA bureau.
And let's get a check on the latest world and national news with Leslie Lotto in the Bloomberg 1130 newsroom in New York.
Thanks, Carolyn. Jess, Florida is getting more help from the government as Tropical Storm Idalia heads toward the state's Gulf Coast. President Biden approved federal disaster assistance for the area earlier today, allowing FEMA to organize and help fund relief efforts in affected communities. Idalia is expected to become a hurricane later today and could make landfall near the Big Bend on Wednesday morning as a Cat 3. Governor Ron DeSantis stopped his campaign to get home to keep an eye on the storm, telling reporters about the forecasted timeline.
I think as we get into the late Tuesday, early Wednesday, it's going to start to get really nasty. And of course, they're anticipating a landfall sometime Wednesday morning, Wednesday afternoon.
Dozens of counties all the way up the Panhandle on alert for the storm's effects. The Biden administration says federal emergency management assistance has been approved with FEMA crews already there. Speaking of the campaign, former President Trump may be headed back to Atlanta soon after Thursday's surrender at the Fulton County Jail. Unlike his other cases, Fulton County does not arraign a defendant on the same day they are booked and processed at the jail. The arraignment where Trump would enter a plea in a courtroom happens at a later date. Hawaii's electric utility acknowledged its power lines started a wildfire on Maui, but then faulted county firefighters for declaring the blaze contained and leaving the scene, only to have a second wildfire break out nearby and become the deadliest in U.S. history, or well, then in more than a century. Utility released a statement last night in response to Maui County's lawsuit, blaming them for not turning off the power, even though there were high winds and dry conditions. Global news 24 hours a day, powered by more than 2,700 journalists and analysts over 120 countries. I'm Leslie Lotto, and this is Bloomberg.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all in the green. Not only that, but the Russell 2000 pushing higher as well. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid today, although off their best levels. Dow's currently up 177 points. S&P's gained 88, while the NASDAQ is higher by 20. The U.S. 10-year yield at 4.2%. Gold is up 5, oil trading in the green, and Bitcoin is higher by 0.4%. Among the main 11 S&P sectors, leaders were real estate, telecom, and the materials. Only utilities were in the red, and leaders to the upside in the Dow, 3M, Goldman Sachs, and Boeing, while J&J and Merck led to the downside. In deal news, Danaher agrees to buy Abcam for $24 a share in cash. And in other news, Hawaiian Electric rose as much as 53% after pointing the blame for the fires at the county. Wrapping things up, MasterCard hit a record high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. 18 minutes left in today's trading session. Carol Master along with Jess Metton. Jess, as you know, in for Tim Stanovic. And we've got a great guest with us. Bill Smead back with us, founder and CIO over at Smead Capital Management. The Smead Value Fund, we say it every time he joins us for good reason. They've got about $4.8 billion in assets under management, at least according to Bloomberg data. Continues to be a top performer in the 99th percentile over the past 5 years with an average annual return of nearly 11%. He's a nice guy, but we also like his performance, which is why we have him on. Bill, good to have you back with us. How are you?
I'm well, thank you.
Can I be honest with you? We want to get into your thoughts on the markets, but we just had our Bill Maloney in here, and we've had guests on about financial literacy. Why is it that we aren't smarter as a world, as a country, in terms of teaching kids from a younger age about investing and financial literacy so they really understand where wealth comes from and how to build it so they have a better, stronger financial future?
Well, as a general rule, I just think back to being kids. Getting kids to sit down and do math problems was problematic just from impatience. And there's a sizable group of people that are better at English than they are at math. So the getting the non-math oriented people to do the math is sometimes difficult, I would say.
So if you had to choose a book to read to one of your clients if they're asking about how to learn more about investing, where do you point them to?
Oh, I get asked that question by young people coming into the business all the time. I'd recommend the same 3 books: the Bible, the Intelligent Investor by Ben Graham, and A Short History of Financial Euphoria by John Kenneth Galbraith. And avoiding the ignorance is what Charlie Munger calls it. Avoiding ignorance is as important over, say, 30 or 40 years as it was. Everybody's going to have some big winners, but who avoids the ignorance?
And what are your top questions that you hear from your clients as far as things that they just don't understand but they want to learn more about?
Yeah, what's the ignorance that maybe we have to be careful we're not
You don't want to tell your
ignoring
friends
right now.
maybe, but like maybe you feel more comfortable going to your financial advisor.
Well, the number one issue right now is the number one issue in the market, both that people want to know about. Bill, why are you so convinced that this inflation is not going to go away and that we're in an inflationary era? That is the number one question we get from financial advisors and institutions all across the country. Why are you so adamant compared to other people? So we just got a chart today from the folks at Cypress Capital. They put out great charts. And it shows that the 30-year TIPS, the Treasury inflation protected securities, got to a 2% spread for the first time since 2012. And it hit me like a load of bricks. We were trying to tell people in 2012 that they shouldn't be worried about inflation because they were looking at the growth in the money supply to try to get us out of the financial crisis and thinking that that was automatically going to equate to inflation. But that money supply only becomes inflationary if it gets used. So fast forward to today, $9+ trillion of STIMI checks and PPP and government forgiveness and yada, yada, yada. The borrowing this time did get put into the system. People do want to buy houses. They didn't in 2009, 10, 11, and 12. So the last time we got here, people were deathly afraid of inflation in 2011, 2012 for no reason whatsoever. And this time there are too many millennials with too much money chasing too few goods, and the cat is already out of the bag. You cannot take this and stuff it back in.
You shared notes with our producer, Paul Brennan, and you say this financial euphoria episode has gone to a sustained high that makes the dot-com bubble look like small change. So how does it end then, in your view?
Well, it ends the way they all end. It ends the way RCA ended in 29, the way the Go-Go 60s ended for the Jerry Size Enterprise Fund, the way the Nifty 50 died in 1972, the way the dot-com bubble died. They all end the same way. The residential real estate euphoria of 03 to 06, they all end the same way. So it's funny. People say, well, gee, you know, it just seems like it's gone on forever. Yes, we've basically had a 3 or 4 year topping process in this financial euphoria episode compared to, say, a 1.5 year topping process in the dot-com bubble. That's why we think it's going to be so much more damaging, because they've sucked way more people in and way more money in. And then they called up Doug Flutie and said, hey, let's throw a Hail Mary and get people all jacked up about this AI thing. And they did.
So then tell us specific names that you're buying and you're selling.
Well, not doing much selling because we've kind of avoided the euphoric stuff since the second half of 2021. But we really like the oil business. We like Oxy, Oventive, Devon, Apache. It's just an ideal setup. There's just almost no money is being spent poking holes in the ground. And therefore, whoever has existing streams of production, it will get much more valuable. I'm on a drive from the Portland, Oregon area down to where we live in Phoenix, and I passed a whole bunch of wind turbines in the windiest area of the Columbia River Gorge, the Gorge Scenic area, and they're not moving today. So some days they don't move, but every day people need the energy. And it doesn't always sunshine where they make solar energy, whereas the fossil fuels are there every single day, regardless of whether the wind blows.
Hey, just real quickly, just got about 30, 40 seconds. And I agree with you, because the transition to EVs, it's happening, but it's slow. And supply-demand metrics seem to be in oil's favor. 30 seconds left. Home builders, you still like that, right? That group, some of them?
Still like them. They were very strong, and we had a bit of a euphoric high on the news that Buffett's folks were buying. That's a great 5 to 10 year play. Because whenever we finally decide to stop tightening credit and allow rates to come down in the next recession, I think those stocks will take off like a cut cat.
All right, and they've already had some nice performance, outperformance, certainly in the past year or so, or certainly this year. Bill Smead, we always appreciate it. Bill Smead, he's founder and CIO at Smead Capital Management. We mentioned the value fund beating pretty much all of its peers over the past 5 years, 99th percentile. Carol Master, Jess Metton, this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The cosmetics maker Natura & Company Holding is considering the sale of its body shop unit as it seeks to cut costs, the latest step in a reversal of a major global expansion strategy. Natura acquired the body shop from L'Oreal about 6 years ago. Chevron says it has received notice that strikes at its liquefied natural gas export plants in Australia will begin September 7th if it does not reach an agreement with workers. Unions have given notice for industrial action at the Gorgon and Wheatstone export plants. Instacart, America's largest online grocery delivery platform, filed plans to go public as it prepares for a listing that stands to further energize an IPO market that has been warming in fits and starts. Breon Lynch is head of market insights at EquityZen. She was a guest earlier today on Bloomberg Markets.
They got a strong vote of confidence by Pepsi, who's investing $175 million in this IPO, and a lot of the thesis or, the bull case that they see is around the advertising piece of Instacart's business. So about 30% of their revenue comes from advertising. So when they highlight different products, on their marketplace to users, and this actually helps diversify their revenue stream in ways that, some of these other players haven't done yet.
Instacart will use the ticker CART, C-A-R-T. You can hear more of the conversation on the Tape podcast. And those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody. In just about 4 minutes' time, we're going to head over to our TV colleagues, Shanali and Katie, and talk a little bit about the Monday trade. We are seeing some buying, I feel like, into the close, although we kind of then turned over again on the equity side of things,
Right.
Jess.
I mean, there isn't really a decisive move here, but nonetheless, after some big moves last week, looking at more of communication services actually leading the way, some more growth-oriented corner of the market, but actually 10
Is
of
it
the 11
broad-based
sectors.
buying,
Well, it actually,
or
I
was?
mean, so actually 10 of the 11 sectors are higher right now. Utilities are flat, so it's just marginally lower. But for the most part, it's really just communication services that is kind of, that sector's up about 1% right now. But other
What's
than that,
volume like?
Right, volume is, AVAT is what I like to use in the terminal.
It's
And
down,
so
right?
if you look at that, correct? You can do
lot.
it for over different spans, though. So I'm going to take a look over here.
What's
at
the
last
smart
10
one?
days.
Like, I've got a 10-day that I'm looking
I have
at.
a 10-day, and that's what I was just looking at. It's down almost 0.25%.
That's a lot.
Right, it is. And then you can also do them for over the past 30 days. I'll take a look at that too, past 100 days. But those are usually what I use to gauge volume.
Just walking in or commuting in this morning, I was like, where is everybody? Because it was pretty quiet.
It is, even on my team, it's pretty quiet.
Although
I
it was
gotta
pretty
say.
busy here when I walked
mean,
into Bloomberg this morning.
It is, but I do feel like there's a lot of people still on vacation. I know the U.S. Open, right, that's going on right now.
Later
Then we
in
have
the
Labor Day
week.
weekend coming up. So
Brings
I guess
a lot of
everybody's
people
trying to
to
get
New
that
York.
final. Especially if people have kids, they want to take them on vacation and get all that in
Right?
before
School starts,
summer
certainly here.
technically
If you're down south, though, like school's already started.
That's actually true.
There,
Being from the south, I can tell you, I always started really early.
Just want to mention a story that's certainly on our radar just quickly. Our Sri Natarajan, who covers all things Goldman Sachs, along with our Shanali Basic. Goldman striking a deal to sell an investment advisory business aimed at the mass affluent market to creative planning, a wealth management firm that oversees about $240 billion. But Golden, and this was actually one of the stories I read over the weekend. There was a whole story about David Solomon by another publication, but just that unwind from that kind of more consumery focused part of the investment world, but Goldman unwinding that and continues to do so.
And also just Goldman in general, before they had reported this earnings for the last earnings season, obviously being under pressure a lot. So a lot of focus on David Solomon, especially in recent weeks.
All right, folks, we're going to head over to our TV colleagues, our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, counting you down to the close on this Monday, August 28th. Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Shanali Bassett counting it down to the closing bell, here to help help take us beyond the bell with a global simulcast, that is. Joined now by Carol Master and Jess Menton. We bring together all of our audiences, television, radio, YouTube, etc. And Carol, if you take a look at the markets, both stocks and bonds, feels like we're in a little bit of a holding pattern.
Yeah, absolutely. Well, I think we're all still taking a breather coming off of Jackson Hole, getting ready for the data dump, if you will, in the United States. Having said that, you want to find some outperformance, guys. I don't know if you've looked at the banking sector. You've got the KRE, the regional banking ETF. It's up about 1.5% today. And if I look at the KBW Bank Index, it's up about 1.25%. So we're definitely seeing some outperformance among the financials. Is it because of higher rates? And they can, I don't know, but that can also be problematic. So anyway.
I thought you were going to go to China.
Stay tuned. I have my gainers coming.
I have to point out, even though it seems like a very summer doldrum type of day, the S&P 500 hanging on to these gains, that would mean its first back-to-back gains in August, if you can believe that. So that's something, even though we are just marginally higher, something I've been keeping my eye on.
There's a lot of assets trading range bound. You look at not just the S&P now cooling off before Labor Day. You finally have kind of a top there in treasuries for now. And then you also have oil also just fluctuating between 79 and 80. The VIX even cooling just a little bit here. It feels a little like the calm before the storm.
Calm before the storm. We'll see what tomorrow brings and the next day and the day after that. But you take a look at how we're settling up right now, about 13 seconds to go. The S&P 500 actually finishing a bit higher here, 0.6% or so. That is close to session highs. You take a look at the NASDAQ composite doing a little bit better, going to finish about 0.9% higher. You have the Dow Jones Industrial also getting in on the action. Carol, going to finish up about 0.6% higher on this Monday.
All right, so on this Monday, though, Katie, you dig a little deeper into the S&P 500. Yeah, we're seeing some broad-based buying, although I know we're going to break it down into because some of the moves are really slight. But nonetheless, you've got about 419 names in the S&P 500 actually tracking some gains on this Monday. 80 Shinali to the downside, 4 unchanged.
Yeah, let's take a look at those sectors, too, because you do finally have some love over at the semiconductor index. That is your biggest gainer today on the S&P 500. It is up more than 1%, more than 1.3% really. Media and entertainment also up more than 1%. You are looking at just a couple decliners here. Insurance and utilities slightly down on the day, but pretty much flat. Mostly green on the screen, guys.
All right, so that's your major industry groups on this Monday. Let's get into some of the individual gainers, and I think you guys have probably been talking about it. Everybody's been talking about it. 3M, top of the S&P 500, your number 2 gainer, finishing just off its highs of the day, but still with about a 5% gain. Bloomberg News reporting the company has tentatively agreed to pay more than $5.5 billion to resolve more than 300,000 lawsuits claiming it sold the U.S. military defective combat earplugs. So settling some litigation overhang, if you will. Analysts saying the agreement could remove that overhang on the stock, and investors certainly seeing that that's the case by sending the stock up more than 5%. Hawaiian Electric, man, soaring today, up 52% at its highs, finishing the day with about a 45% gain today. This is after the utility basically pushing back against a lawsuit that was filed by Maui County that accused the company specifically of starting the deadly Lahaina fire, suggesting the county's fire department may be responsible for actually losing control of the blaze. Basically, they're saying that the second blaze that swept through the town in the afternoon started hours after Hawaiian Electric, their power lines in the area had been turned off. So the utility putting that out in a statement, and so that certainly sent that stock higher. But I should point out that the stock is down roughly 70% year to date. And then, Katie, as you teased,
thank you.
You're welcome. Thank you. Actually, the Nasdaq Golden Dragon China Index up about 2.25%. So some outperformance there, rallying. But keep in mind, the CSI 300 overnight was up about 5.5%. Lost most of those gains. Chinese authorities basically trying to get investors interested once again in the Chinese universe and financial universe. It's really hard. They've got a lot of problems, slowing growth, concerns about the property market, foreign funds extending what's set to be record outflows from China this month. So investors continuing to pull back, although we did see a little pop in today's session, certainly here on that Dragon China Index, as Chinese authorities continue to try and make investors interested in the market, Jess?
I unfortunately have to take the decliners. So the losers of today, so Novacure, have to point this out. You look at that stock, it's down about 38%. So this is worst day since June 6th. And this does come, the company did say that a late stage trial of its ovarian cancer drug didn't meet its primary endpoint of overall survival at its final analysis. It's the biggest drop, obviously, like I said, in about almost 3 months actually. And then software company CrowdStrike, you take a look at that stock, it's down close to 4%. So that actually did fall after Morgan Stanley did downgrade it to equal weight from overweight ahead of actually its earnings results on Wednesday. So keep that in mind. And then among some of the biggest decliners in the S&P 500, Bio-Techne, that's down about 2%. So another decliner to keep an eye on today, even though we had obviously more gainers.
All right, let's get to the bond market. Interesting to see a little bit of love come back into the Treasury market after some pretty relentless selling, especially at the long end. You start with the front end there, 2-year yields falling by about 3 basis points. That saw the bulk of the buying. You did see, though, the 10-year yield also fall by, we can round that up, 2-3 basis points. And the buying dissipate a little bit. You go farther out the curve. Interesting to see the 2-year get the bulk there. Again, it's an August day, so I don't want to make too much out of this. But this is one of the first trading sessions we have after we heard from Jerome Powell at Jackson Hole on Friday. And it seemed like a pretty neutral speech overall. I was in Europe, so not exactly paying attention, but seemed like reading the reactions pretty neutral.
Wait,
but
is that a travel name drop, kiddo?
I was having a great time, just so you guys know I wasn't here, but I did tune in to watch a little bit of Jerome Powell.
No,
again,
you didn't.
A little bit. It didn't seem like he tilted any such way, but you look at the price action today, maybe being interpreted a little bit dovish.
It was a quick speech. I guess you could have too.
It was longer than 8 minutes, though, last year.
It was. It's interesting. We talked with our Michael McKenzie earlier, who watches the bond market and rates. And what did he say? Basically, this idea that Jay Powell, coming off of Jackson Hole, has investors and the trading community exactly where he wants them, and basically a lot of doubt about not quite sure what's going to come next. And maybe the Fed could continue raising rates. Maybe they pause. It's like where he wants them.
Yeah, I was going to say exactly where he wants them is apparently in limbo. And one thing that has been interesting is the expectations for next year. The one thing he was very clear about is the fight is not over, and that means higher for longer. Now, how much higher for how much longer, that is what's in flux, but no more forward guidance when you look at least this speech and anything he might be saying ahead of us.
I know everyone's looking ahead to, obviously, Jobs Day on Friday, and then the Fed's preferred gauge for inflation with PCE on Thursday, but also on Thursday, we're getting Lululemon earnings. So I want to know, are people still willing to pay $100 for some of this athleisure wear, and what that really tells us about the consumer? So I'm focused on that later in the week.
As long as they're not transparent, I'll buy it.
I do love Lululemon, though. It is interesting. We do get a lot of economic data this week, and it feels like that's really going to be the focus from here, because even though we do have Lulu coming up, really feels like the bulk of earnings is behind us. We don't get the Fed meeting until a little bit later in September. So what's left? We really just have the data to look forward to and drive the price action.
Yeah, jobs certainly a focal point here in the United States, but I'm thinking about the PMI numbers that we're going to get on China, on Europe, really around the world. And I think that'll be really important to get an idea of what's going on globally. I mean, we've got to remember it's a global economy, and while everybody's going to maybe do things a little bit differently based on their domestic economy, it all impacts one another.
Yeah, it's for sure that things are going to get a little more complicated after Labor Day, because this idea of divergence among central banks across the world will impact pricing everywhere. And then even in our own data, there's a lot of discrepancies, and there's a lot of tea leaves to read in between the lines. I know Friday I'll be watching wages, for example, because there are a lot of questions about that persistence of wage price increases.
Exactly, and what that means for the path and the endurance of inflation from here. But it is an interesting point that you raise about the different problems that are starting to face these different developed market central banks. Of course, the set of issues that the ECB is dealing with is now sort of breaking away from what the Fed is dealing with. We saw these central banks moving in lockstep for much of the past 3 years or so, but now we're at the point of the cycle where we're starting to see some divergence here, Jess, and that's what's really interesting to me.
I just want to point out from a technical perspective, some of the near-term resistance that technicians are watching is 44.40. We closed around 44.33 today, so getting closer to that, so I'm going to be focused on that tomorrow.
Guess what, guys? We're just about 6 weeks away from the next earnings season. Katie, that's just for you.
How far away are we from Christmas? Do you have that?
No, I'm an earnings-focused kind of guy.
Months away.
Yeah.
All right, guys, that's a
while.
wrap. Katie, hope you feel better.
Thank you.
All right, that's a wrap. Our cross-platform coverage on the markets, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you again tomorrow. All right, everybody, another 24 hours and another 24-hour news cycle packed with news on China. This includes U.S. Commerce Secretary Gina Raimondo saying today that the majority of U.S.-China trade has nothing to do with national security and that it's possible to promote and protect exports at the same time. She commented on the exact framework to do so.
We agreed to establish a new commercial issues working group, a formal working group, which will involve U.S. and Chinese government officials, and very importantly, U.S. and Chinese commercial private sector representatives, as we seek solutions on trade and investment issues and to advance U.S. commercial interests in China.
And that, of course, is the U.S. Commerce Secretary Gina Raimondo, who has been meeting with Chinese officials. Many would ask, is it really possible to do both, to promote and protect exports at the same time? We have a great voice on this and excited to have back with us, one that we have leaned on a lot in the past when it comes to U.S.-China relations and really the intersection between geopolitics, policy, and the markets. With us is Stefan Seelig. He's managing partner at Bridge Park Advisors. He is a former Undersecretary of Commerce for International Trade at the U.S. Department of Commerce. That was during President Obama's administration. He's once again with us on Zoom from Long Island. Stefan, so good to have you back with us. How are you?
I'm great. Thank you, Carol. Great to hear your voice again.
Well, same here. Tell us about what we heard from the Commerce Secretary. Is it possible to do both, promote and protect exports at the same time?
Yeah, I mean, I think these clearly are two different tracks on the one hand. On the other hand, I think over the last number of years, those messages have become somewhat muddled, and the Chinese have interpreted a lot of the actions that have been taken both in the Biden and Trump administrations as actions that are meant to depress their development and the rise of China, as opposed to protecting our national security interests. And as the Secretary said, they really are different things. And I think the value of this dialogue, which is really just reestablishing what had been in place and frankly what I had led during my tenure, is to foster relationships that will allow us to potentially make progress in what is a fiercely competitive relationship.
Well, take us back. I mean, take us back to your time during the Obama administration, the importance of the U.S. commercial relationship with China. Rank it and how you all approached it then and what you believe was how China ranked it as well. And is it very different today?
Well, look, it has primacy in so many ways. We're talking about the two biggest economies in the world. The amount that we import and export to each other is very significant, with the exception of Mexico and Canada. There are no two more important relationships in Mexico and Canada, is obviously because they are border states. When I was Undersecretary, I spent more time in China than any country by far, and I worked to foster the relationship with my counterpart at the Ministry of Commerce to reflect that reality.
But did they rank this relationship as important, and do they still, you think, today?
For sure, and in many respects, I think they view it as more important because the number of issues that we're competing on are growing, but also the number of issues that we need to cooperate on are also growing. So as their economy grows and as they look to establish themselves as a major player, both in political, economic, and commercial spheres, you know, their ability to work effectively with the United States becomes only more important. And I think that's exacerbated right now, Carol, because frankly, you know, their economy is slowing and they're facing a set of economic issues that we haven't seen or they haven't seen in decades.
What is the biggest issue? Because you laid out some of it, just teasing it there when you're talking about the economy, but then there's the geopolitical issues, there's the financial markets, there's also when you think about the property concerns and how that's tied to the economy, which is the most pressing issue at this point?
Well, I mean, look, from their perspective, they have a slowing economy. This year, it's going to grow at roughly, 4%, which is, far less than the double-digit growth than they've had in the past. But I would say it's still, roughly 2x what we're growing at. As you point out, they have a real estate crisis in the making. Country Garden, which is their largest developer, may default on their debt payments. China Evergrande filed for Chapter 11. Their exports are slumping for all the reasons that we're talking about, which is our economies begin to friend-shore and the impact of sanctions on their economy. Exports alone are down 15% year over year for them. They're facing rising unemployment, especially amongst young people, where some statistics suggest that more than 1 out of every 5 young people in China are now unemployed, which is going to have real risks to social stability in that country. They're seeing failing or slowing foreign investment in the country. The renminbi is depreciating, and consumers are losing confidence, which is causing them to spend less money than they had in the past as they look to save. And so for all of those reasons, the Chinese economy is under real pressure. And I think as a result of that, it reminds them, and not just us, about how vital we each are to each other in our success.
Stefan, do you think, China's made it very clear that they don't want to be the manufacturer to the world, and they have definitely taken steps for that. We talked about this earlier in a segment about Apple slowly moving, iPhone production elsewhere, but it's still, for the most part, in China. But should we want China to be developing its domestic economy? Should we want it to be moving along from, kind of a very special emerging market to more of like a developed world and developed market? Should we want that?
Well, it's a two-edged sword, right? Because, that competition that development underscores and makes them stronger in some ways, but it also makes us stronger because they're going to be buying more of our products and services, and they're going to have more money, to spend in our economy through either foreign direct investment, intermediate goods, or otherwise. So it depends on if you think of them as a competitor, but also as a customer, and they're both.
So what do you think is the right strategy for the Biden administration to take towards China when they are economically vulnerable at this point?
Well, look, I think what the secretary said is extraordinarily important, that it's about, communication. The president said to the secretary before she left that we need to communicate to avoid conflict. And I think in any situation where you have fierce competitors, you also need intense diplomacy. And the secretary is a very capable commercial diplomat, and that's what she went over there and is over there doing now. And frankly, what hasn't happened over the last 5 years, when there have been no face-to-face meetings between our commerce secretary or undersecretaries and their counterparts in China.
Stefan, what's more important, the stress with or the tensions between China and Taiwan, and then how that relates to the rest of the world, or the relationship that President Xi has with President Putin? What should we spend more time on? Or it can be both.
I'm not sure I could ordinarily rank them, Carol.
Okay.
But clearly China has different interests geopolitically and economically and commercially than we do. And, what I've always said is, hitting China over the head with a cudgel is not going to be an effective way to actually make progress. And what we need to do is to look for win-win outcomes where there are things that advance our interests and advance their interests, and there are a whole host of those.
All right, sit tight for a second, Stefan. You've been kind enough to give us some extra time, and we have some more that we want to talk to you about, including politics in general and the financial markets and some of the property concerns that we continue to see. We talked about a little bit with China, so continuing to kind of pick your brain. Stefan Seelig is coming back with us. As we said, he's managing partner over at Bridge Park Advisors, former Undersecretary of Commerce for International Trade at the U.S. Department of Commerce during the Obama administration. But he's a great voice, Jess, and I was kind of telling you, and we were sharing beforehand, just this connection between understanding financial markets, understanding policy, understanding politics.
And especially the world's second largest economy behind the United States and what that means globally.
That's why I always like to talk about the Chinese market. I mean, people laugh at me, but I'm like,
It's true. It's crucial.
It's crucial. All right, we're coming back in a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. For the first time this month, back-to-back gains for the S&P 500 index. Today, the S&P advanced 27 points to 4433, a gain of 0.6%. NASDAQ was up 114 points. That was an advance of 0.8%. The Dow up 213, higher by 0.6%. 10-year yield 4.20% with a 2-year yielding 5.04%. Spot gold up $5.50 the ounce to $19.30, up by about 0.3%. West Texas Intermediate crude closing above $80 a barrel, up 0.4% right now at $80.12. Goldman Sachs shares up 1.8% today. Goldman Sachs announcing a deal. According to sources, it is selling its investment advisory business aimed at the mass affluent market to Creative Planning, a wealth management firm that oversees about $240 billion. That stock again up by 1.8%. Again, recapping, S&P up 27, a gain there of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get back to our guest. Still with us is Stefan Seelig, as we said, managing partner over at Bridge Park Advisors, former Undersecretary of Commerce for International Trade at the U.S. Department of Commerce. That was during the Obama years. He is still with us on Zoom from Long Island. Stefan, if I may, I'd love to talk to you a little bit about politics, because we were just talking a lot about the importance of that relationship between U.S. and China. The Republican presidential hopefuls, the debate last week, talked a lot about China. There was a lot of pushback. Is that cause for concern when you see that? I know some of it is all just grandstanding and performance, but some of it is not.
Yeah, I guess, Carol, it's really not just the Republicans. In fact, the only thing I can think of where the Republicans and Democrats seem to be agreeing is, getting tough with China. And I think there's a little bit of a contest between them as who can appear to be tougher with China. And I don't think being tough is necessarily always being smart. And so, frankly, I think the conversation should be about what should we be doing to advance our interests, as opposed to what should we be doing just to punish China.
And is that a cause for concern at all?
Well, for sure, especially, Jess, as I mentioned, with China's economy being under pressure. I think the last thing we want to do is push them so hard that they lash out and take actions that would be adverse to us, and we get into this, tit for tat. Because, as you've said, these are the two biggest economies in the world, and we can punish each other plenty, and that doesn't really help us.
Would you want to be back in the White House advising?
Well, look, I think it was an honor for me to, do that during the Obama administration. And I think, to the extent that, you are called to do that, I think it's a really hard thing to turn down for any of us that care about our country.
When you're looking at some of the Republican candidates, who kind of stands out in your mind that when you're thinking about the U.S. and China relations, as far as what could be a potential viable candidate in that sort of realm?
Well, I'm not sure that's an easy answer, Jess, because as I've said, I think there's just a lot of piling on. And I also would say is, what people say on the stage in the, primary season is probably not necessarily going to directly inform their policies, if they get into the Oval. That being said, I think this has to be, on the radar screen for whoever is sitting in the Oval Office, because of the importance, not only, geopolitically, but commercially and economically for, employment in our country, the success of our economy and our consumer.
Well, and I'm curious too, Stefan, about your clients and those CEOs that you are talking about. Is U.S.-China typically top of mind for them, or I'm curious what is, if it's not that?
There's a lot of trepidation about going into China, and I think especially, and that really I think is the purpose of the Secretary's trip, which is to really reestablish a dialogue so people can begin to plan. Because if the relationship is so uncertain and so volatile, it's very difficult for companies to, effectively plan. And if you can't plan, you can't make investments. And so I think, that is just critical.
And especially when you're talking about companies, the curbs that are being put on chip makers, how much of that do you think, especially this is companies that have performed very well in the stock market this year, but I mean, when it comes to those types of companies, what do you think that would really mean for them, and when it comes to doing deals with China?
Well, look, it's a very big market, and we've seen them take actions, including blocking, Intel's acquisition of an Israeli chip company, which is really adverse to the interests of a U.S. company. And so that really is the point about, they have the ability to respond in kind. I will say, some of the things we have done, I scratch my head a little bit, like the recent executive order that is limiting private equity and venture capital investment in, advanced chip making and other sectors. It strikes me that, the one thing that China, doesn't lack for is capital. And so the notion that somehow we are going to constrain their development by not having U.S. investors invest in certain sectors in their economy is not just something that I can easily follow the logic of.
So in terms of, going back to some of the things that the folks that you work with, your clients and CEOs on their top of mind, we just had a headline crossing the Bloomberg terminal. San Francisco Fed's head of bank supervision will retire. So, certainly the U.S. banking sector and the failure of Silicon Valley Bank still on the minds of everybody, and watching the regional banking sector and for perhaps what the San Francisco Fed missed, and maybe, what we may still be missing perhaps. That sector is certainly on our minds. What else, Stefan, is, in a day where we talk constantly about Fed policy, higher inflation or persistent and sticky inflation, even though it's down a lot in the past year, what else is kind of top of mind?
Well, I would say, we did avoid anything resembling a banking crisis, so the Fed seems to have done a very good job of managing that situation. I would say there are really two things. One is inflation going to be tamed? And what is the Fed going to have to do in terms of raising interest rates in the future to make sure, that happens? Are we going, and if you look at historical data, you really do have a, short window, 4 or 5 months to really have a good view about what the economy is going to do. And I think, over the next 4 or 5 months, folks are not worried about dipping into a recessionary period, but forecasting for a period that is longer than that is exceedingly hard to do. And the question is going to be if they have to raise interest rates, once, twice, or 3 more times, which I think, is not outside of the realm of possibility.
Wow.
To what degree does that have a dampening impact on growth in our country?
How much does China's disinflation actually help the U.S.?
Well, it certainly doesn't help their consumer, and it doesn't help, their economic engine, which is, we've talked about, Jess, is, so important for, us in terms of being a buyer of U.S. goods and services. One of the things the secretary is for sure going to talk about is the importance of tourism. Since the pandemic, Chinese tourism in the United States and U.S. tourism in China has, fallen off a cliff. The number of flights that are going between the two countries is very small. And travel and tourism, which was a part of the government that I helped look after when I was there, is the most important part of our service economy. And that's a perfect example of something that we need to be on track if, we are going to continue to grow and create good paying jobs here.
And it's interesting too, because we talked a lot last week about Boeing, right? And maybe the ability to once again get back into the Chinese market, certainly with the 737 MAX, which has been obviously problematic for understandable reasons, but it's so important to their growth story going forward. I do want to just stay with what you talked about, the possibility of maybe 3 or 4 more rate increases. You are on the board of the Simon Property Group, well-known REIT developer, malls, outlets, mixed use. Property concerns here in the U.S., do you feel like we are fine, or are there still risks out there?
Well, look, there is no such thing as the real estate market, right? So the real estate market in New York is different than San Francisco, which is different than Austin. And, apartments are different than office, which is different than multifamily, that is different from malls. Not to sound like a booster for the company whose board I sit on, but Simon Property has the best management, the best malls, and the best balance sheet in the industry. So we're feeling very, very good about our position. You can't say that, I presume, if you are an owner of office buildings in San Francisco.
No, really well said. You're right. Location, location, location. Top of mind every morning when you get up and you look at the news stories, what is it? And just got about 30 seconds left.
Well, look, the world is a volatile and dangerous place. And so I think when you wake up, you just, you take a deep breath. If something bad is not happening in Asia or in the Gulf or, elsewhere, because frankly, any one of those things can, throw a wrench into the global economy, given how interconnected we are. We've lived through this situation in the Ukraine with Russia, but, and we see how problematic that is. But the connectivity between the U.S. and the Russian economy is infinitesimally small compared to the connectivity between, the U.S. and Asia and China and elsewhere.
Right.
And so, that to me is, highest on the list, I would guess.
Stefan, thank you so much, and really great to connect and hear your voice again. Be well. Stefan Seelig, Managing Partner at Bridge Park Advisors, joining us on Zoom from Long Island, New York. Right now, let's get to world and national news. Leslie Lotto on it in our 1130 newsroom. Leslie, take it away.
Jess and Carol, thank you. Another vigil is planned for tonight after that racially motivated shooting that killed 3 people in Jacksonville, Florida over the weekend. Community leaders are expected to gather downtown tonight as they call on state lawmakers to take action against white supremacy. Sheriff T.K. Waters says 3 black people were killed when a 21-year-old shooter opened fire at a Dollar General on Saturday. He then killed himself. FBI is investigating the shooting as a hate crime. The campus of North Carolina Chapel Hill has been swarming with police who were searching for an armed and dangerous person. They now have called off people standing down and staying inside. But this student, Allie Henson, was on lockdown there.
We're currently seeing a lot of helicopters fly overhead, and about 20 minutes ago we got the alert Carolina saying the suspect was still at large.
Yes, but that suspect was just caught moments ago. The campus and surrounding buildings had been on lockdown for some time. Tropical storm Idalia is picking up strength and could become a major hurricane when it reaches the Gulf Coast of Florida. John Tilakos of Tampa International Airport says flights will be stopped at the end of the day today to protect passengers and staff.
We've made the decision to close the airport, suspend operations at midnight tonight to all commercial flights.
They hope to reopen on Thursday, and Spanish prosecutors have reportedly started an investigation of their country's soccer federation chief after a kiss to the lips of one of their players right after they won the World Cup. Prosecutors asking the player if she'd like to officially report herself as a victim. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. It was an up day on Wall Street for the Dow, the S&P, and NASDAQ, but perhaps most importantly, for the first time this month, we had back-to-back gains for the S&P 500 index. Today, the S&P climbed 27 points, up by about 0.6%. The Dow was up 213, higher by 0.6%. NASDAQ up 114, today up by 0.8%. Stocks rose, bond yields fell at the start of a week full of economic data that will help stage the outlook for Federal Reserve policy. 10-year yield 4.20% with a 2-year 5.05%. Spot gold 19.19 the ounce, up 0.3%. West Texas Intermediate crude closing back above $80 a barrel, $80.11 on WTI, up by 0.3%. So in this environment, what should people be putting their money into? Bill Smead is Chief Investment Officer at Smead Capital Management. And right here on Bloomberg Business Week, he was asked, what is he buying and what is he selling?
Not doing much selling because we've kind of avoided the euphoric stuff since the second half of 2021. But we really like the oil business. We like Oxy, Oventive, Devon, Apache. It's just an ideal setup. There's just almost no money is being spent poking holes in the ground. And therefore, whoever has existing streams of production, it will get much more valuable.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. And speaking of energy, Chevron says it has received notice that strikes at its liquefied natural gas export plants in Australia will begin September 7th if it does not reach an agreement with workers. Chevron shares up today by 0.7%. Again, recapping, stocks higher, S&P up 27, a gain of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Thank you so much. Charlie Pellet there. Well, I got to say, Jess, something I look forward to every year, and that is the list put out by the Bloomberg New Economy team. It's a group of people who are probably not household names and yet really should be because they are truly changing the world one step at a time. The latest class of individuals has been named. It is the Bloomberg New Economy's 2023 class of catalysts. And here to tell us a bit more about it is Bloomberg New Economy editorial director Eric Schatzker on Zoom in Toronto. Eric, thank you so much for doing this. I really do look forward to this list. I think they're just an amazing group of individuals, but give everybody a reminder of who they are, how you guys find them.
Well, you said the key words, the three key words, change the world. And it truly does take a special kind of person to change the world, and those are the people, I should say, that we every year are on the hunt for. We're not alone, of course. There are lots of investors out there, venture capitalists, who are in the hunt for people who can change the world. But our focus, as you know, Carol, is slightly different. We're looking for people whose focus is on, or whose mission, if you will, is about outcomes and not necessarily about money. In the process, they may prove to be extremely successful entrepreneurs, but as I say, we're more interested in their capacity to change the world and not necessarily their capacity to make billions of dollars. We look everywhere. We tap into the wisdom of Bloomberg's unparalleled global newsroom. As you know, we have about 2,700 reporters, editors, researchers, and analysts scattered across the globe. And that gives us a reach that very few other organizations on this planet have. And so with their help, we solicit nominations, and then we go through a selection process to find the 20 people whom we chose as this year's catalysts.
So Eric, walk us through this list. What are the highlights?
Well, I don't want to, I'm very reluctant, right?
You don't have to pick a favorite child. You don't have to do a favorite child.
In a way, right? Well, the first thing I would say is I'm very proud. We are all very proud of the fact that this is a very rich list. And what I mean by that is not the amount of money these people have. 11 of these 20 people are women. And if you look at them, it's a very diverse list from across the world. These people are doing amazing things in many different places. Marina Bellatani, for example, runs a firm in Brazil called Mabe Bio. And what she's trying to do isn't just make fashion more sustainable. Sustainable fashion is a goal I think we can all embrace, but how you do it matters. Much of the faux leather that's made today is not biodegradable, and so bizarrely, leather, of course, is biodegradable, and so if you make faux leather for the sake of the animals, perhaps, that isn't biodegradable, you're not really doing the planet a whole lot of good. So what she's done is she's gone to these trees in the rainforest, which of course are harvested sustainably, Aniko trees, and she's making a biodegradable plant leather. That's one example. There's another gentleman from Australia named Guy Hudson, who is the founder and CEO of a firm called Loam Bio. We're all interested in carbon capture. As you know, carbon capture is proving, to be very difficult to do at scale. What Loam Bio does is it injects a safe fungus into soil that produces what are called microaggregates that double the carbon storage capacity of soil and actually also serve to improve its yields for farmers. So, you know, two for the price of one. Very ingenious and with the potential to truly change, if you will, for lack of a better term, transform the carbon storage capacity of agriculture. And then I'll just point out one other person, and of course we can go through more if you like, but Rico Yu in Hong Kong is the founder and CEO of this firm called Arca-Reef, which is using terracotta clay to 3D print the substrate for coral reefs. The situation in Florida, for those of us living in the United States, has really thrust into focus the tragedy that's unfolding on the world's coral reefs because of, you know, hot water, overheated ocean water, and the bleaching process that really kills coral reefs. There needs to be a way to allow reefs to flourish in other parts of the world where they don't naturally take, and this 3D printing process of terracotta clay is just, you know, strikes me anyway as genius, if not just ingenious.
You know, I think you and I have talked about, as a diver, and I think you dive, you know, we have seen the devastation in the world's reefs. And so this, to me, I just want to kind of read more about what they're doing because I just find it kind of mind-blowing. The other thing is, Eric, I feel like, yes, there are individuals from developed markets, but it is always a reminder when we go through these lists how important the developing world is into finding like unique solutions to the world's problems.
That's right. And many of the solutions developed in the developed world, or at least conceived of in the developed world, aren't immediately relevant to the developing world. The developing world is where most of the world's people live. It has, faces the greatest obstacles in terms of economic development and improvement of quality of life, let alone GDP per capita. It is where, I think it's safe to say, the world's most confounding problems exist. And so that is where some of these, whether they be made in Bangladesh, made in India, made in Indonesia, solutions, made in Brazil solutions should and are appearing. And we love the fact that we can highlight them.
I have to also point out AI is such a hot topic, and you do have Adam Wenchel in there.
You worked it in, Eric.
Exactly.
You worked it in.
Helping AI companies reduce bias in their information systems that they provide. What did you find when it comes to AI and how it fits into your list?
And just got about 30 seconds, kiddo.
Well, AI is important, as you say, because it's everywhere. But how can innovators contribute in a new economy sense to AI? It is by what you say, making it more objective. If we're able to improve the quality of AI tools that are being developed in the developed world, then I think they'll be that much more applicable to the global economy.
All right, so appreciate it. Eric Schatzker, Bloomberg New Economy Editorial Director there on Zoom in Toronto, breaking down Bloomberg New Economy's 2023 class of catalysts. Highly recommend if you want to be inspired, a little bit in awe, just people changing the world. And this list, you can find out more. Just head to Bloomberg.com, and you can also find it on the Bloomberg terminal. Eric, thank you so much. So appreciate it. All right, you are listening and watching Bloomberg Business Week. Week on this Monday. Carol Master along with Jess Metton. Jess in for Tim Stanovic, as you know. We are on Bloomberg Radio, on YouTube, and of course streaming on Bloomberg Originals. Don't go anywhere. Lots more to come right here on Bloomberg Business Week.
I'm Charlie Pellet. Look now at our top business stories. Hawaiian Electric Industry shares soared after the utility it owns said its power lines had been de-energized hours before a wildfire that killed at least 115 people in Maui earlier this month. Today, Hawaiian Electric shares surged by 44%. Sources tell Bloomberg Goldman Sachs has struck a deal to sell an investment advisory business aimed at the mass affluent market. Sri Natarajan is following the story for Bloomberg News.
They're selling it to this $240 billion wealth manager called Creative Planning, which is run by a very interesting gentleman by the name of Peter Maluk. But for Goldman, what that means is you refocus your attention on the part of the business that you're really good at, which is serving the ultra-rich.
Goldman is offloading the company just 4 years after acquiring it. Goldman shares today advanced by 1.8%. American Airlines has been ordered to pay a $4.1 million fine, the largest such penalty to date, for allowing aircraft to sit on the ground for 3 hours or more without giving passengers a chance to exit. The U.S. Transportation Department says the action was part of an increase in enforcement starting last year after Secretary Pete Buttigieg began denouncing carriers for causing lengthy delays and canceling flights. Today, American Airlines shares advanced by 1%, UAL up 0.5%, Delta up 1.7%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
Jess Mitten in for Tim Stenovec along with Carol Masser in the Bloomberg Interactive Brokers studio. We're going to have more coming up, but first, let's get a check on the latest world and national news with Leslie Lotto in the Bloomberg 1130 newsroom in New York.
Carol and Jess, thank you. Tropical storm Idalia expected to become a hurricane, as we've been talking about, expected to make landfall in Florida Wednesday. Governor Ron DeSantis says the state has lined up federal assistance in case the hurricane does serious damage.
I have spoken with the president. I've spoken with FEMA Director Criswell, and then I've spoken with a number of local officials throughout Florida's Gulf Coast, and everyone understands the significance of this event, and everybody is willing to work together to achieve the best possible outcome for the residents of Florida.
President Biden's re-election team is reportedly annoyed by California Governor Gavin Newsom's push for a televised debate with Governor DeSantis. Some of Biden's advisors say Newsom's running a shadow presidential campaign at a time when a majority of Democrats say they would rather have somebody run besides Biden next year. Same for allies of Vice President Kamala Harris, all saying that Newsom's positioning himself for a run for the White House in 2028. Donald Trump remains the Republican frontrunner, though, in 2024, but a new poll shows he's lost some ground after the latest GOP debate. Bloomberg's Ryan Teague Beckwith has more.
The good news for people who are running against Donald Trump is that the latest poll taken after the debate showed that there were some people who were maybe giving them a second thought, giving them a new chance, and that there was more people who were losing interest in Trump. The bad news is that he was still at 50%. So that's down 6 percentage points from Emerson College, their pre-debate poll. But that's not enough to really put him at any danger just yet.
Bloomberg's Ryan Teague Beckwith reporting. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this is Bloomberg. And now back to Jess and Carol.
All right, Leslie, so appreciate it. Carol Master along with Jess Mitten. Jess, of course, in for Tim Stenovec on this Monday. Tim will be back tomorrow. Just want to recap what is among our most read stories on the Bloomberg. It was a headline that just crossed a short while ago, but a little bit more color, if you will, and background. The Fed's head of bank supervision in San Francisco, which had oversight of lenders, including Silicon Valley Bank and First Republic Bank, will depart at the end of October. Azure Abazi, Executive VP of the Supervision and Credit Group at the Federal Reserve Bank of San Francisco, will retire on October 31st. This was coming from a San Francisco Fed spokesperson putting out an email today. Neil Willardson will replace him as interim executive VP. That will happen on October 1st. But the San Francisco Fed has been under a lot of scrutiny,
especially
following
with the bank
failures
stresses that happened in the spring, as we know, with SVB and other lenders. So Abazi, along with Mary Daly, those are two names that have
the San Francisco Fed president, Mary Daly. Yeah, exactly. Coming under scrutiny. I will say that those episodes did reveal management shortcomings at the regional Fed outpost, which, as you know, is responsible for the on-the-ground supervision of small and medium-sized banks. These are the guys that are there